In this video, we are going to talk about effective day trading, how successful day traders do it. Hi guys, welcome back to the channel. If you are new, please consider subscribing so that you do not miss future videos. Like this video, that's the only thing I'll ever ask you to do. I do not ask you to buy anything. I do not sell anything. If you're looking to download free forex robots, free indicators, free systems, books, courses and stuff like that, there are links in the description box below. Visit those blogs and see if you cannot find what you're looking for. Then you can always leave a request in the comment section below, and I'll definitely try my best to find you what you'll be looking for. So let's get into today's video. Day trading tips, how to become an effective, efficient day trader. The reason for this is many people join forex day trading or stock day trading and they really did not know how to do it, so they end up fixating on the market, wasting their time, wasting their lives in the market. All they need is a good day trading plan. So this is what we are going to be talking about today. So first of all, what you want to do is when you wake up is build a watch list. When you wake up in the morning, or you can actually do this on a weekend, on a Saturday or a Sunday when the markets are closed, you can build a watch list. My advice is your watch list should not have more than 5 pairs. My watch list always has less than 5 pairs that I'll be watching for the day. So I also advise that you probably have between 3 and 5 pairs. The rest, forget about them. The more you have a watch list with 1,000 pairs, the more confusion that you are going to have, and you're not going to be able to keep track of all of them. So wake up, build a watch list that is between 3 or 5 pairs, or if you are a person who really wants to be effective, only have one pair, one good pair that you believe is going to do what you think it's going to do. One pair. There are people who are millionaires today just trading one pair. Never forget that. Never underestimate trading one pair. Then what you want to do with your watch list is basically to identify patterns and setups. You need to understand, to identify your patterns and your setups, basically the patterns and the setups that have always made you money. So from that watch list, the second step is to identify the patterns and the setups, and this is easier when you do it because you're only trading a few pairs. That's why I said don't have 1,000 pairs on your watch list. It becomes hard to spot the patterns and the setups. Then as your setups and your patterns come together, now you want to shift your attention to entries, how you are going to make your entries. Obviously you are going to enter the market with proper risk management, that is a proper lot size as well as a stop loss and a take profit. Never enter the market without a proper lot size, which is relative to your account, as well as a stop loss that is that has got enough room for your trade, as well as a take profit. Those things are important. If you are trading without a stop loss, you are obviously trading with fire, because you probably will just end up blowing your account when things turn against you. If you enter with a too huge lot size, obviously you are risking too much for your account. If you enter with a lot sizing that is too small, then even when you win, it's not going to be an effective win. So you need to strike a balance between your lot sizing to have a lot size that's not too risky but is obviously going to make you lots of money. Then importantly, you need to have a take profit. You need to have targets. Otherwise, what's the point of it if you do not have a target? After you place your entries, then you certainly want to step away from the market and just manage your trades. You just here and there log into your charts just to watch how the the trades are progressing. You do not necessarily need to spend your time watching every trade, every tick of the market. You do not need to do that. Then obviously when the market comes to your stop loss, unfortunately you were wrong. Accept that you were wrong and let the market do what the market is supposed to do. If the market then comes to your take profit, certainly then you are in the money. Take your money, bank it, and that's it. So your effective trading day trading plan begins with building a watch list. I said I prefer maximum, if you're going to have a lot of pairs, that you have maximum of 5 pairs. Second step is you need to identify your patterns and your setups, the patterns and setups that always make you money. If they are not there, don't do anything. Don't enter the market. If they are not there, don't do anything. And thirdly, you want to enter the market with proper risk management. You need to enter with proper lot sizing. You need to enter with a stop loss, with a take profit. Then fourthly, we said you need then to manage your trades. Just watch what the trade is doing, including using your trailing stops, and basically just manage your trade, and basically let either the market is going to hit your stop loss or it's going to hit your take profit. And you do not necessarily need to be there stuck watching your charts. Like this video, subscribe if you're not yet subscribed. Until next time, bye.